The insurance business in East Africa suffered two major blows linked to the adverse effects of the COVID-19 pandemic that saw huge claims being paid out. Another significant disruption facing the business is the persisting climate change shocks, which is ripping apart the agricultural sector. But beyond these twin challenges, Minet CEO Sami Muthui says there is a silver lining as innovation in traditional insurance is making a significant shift.
We've had a mixed bag of fortunes when it comes to the economy. Interestingly, Kenya's economy had a good rebound from the COVID years. In 2021, we actually grew by 7.5%. In 2022, we are expecting to have recorded about 6%. However, now a number of factors came to play against this recovery. Obviously, last year was our election year, so there's a bit of a there's traditionally reduced economic activity during an election year, but that went well, and therefore that risk no longer presents. However, at the same time, even as we are recovering from COVID, drought has hit us in a big way. Inflation has gone through over the roof, and never mind the supply chain disruptions that there have been during the conflicts in Eastern Europe. So what has happened is the drought situation being one of the worst, it has affected a lot of lives in Kenya. We are talking about currently we have a population of about 4.2 million people under risk due to drought. Now, with regards to your specific question, how we are hoping to how this is playing out in the insurance industry. Of course, the buying power of Kenyans and businesses has gone down, and that is expected to affect the growth rate of our industry. But through various efforts, we are expecting to actually weather these storms. These efforts include innovation. They include innovation when it comes to distribution. They include innovation when it comes to coming up with more affordable pricing. They also include managing our cost basis in such a way that the cost of doing business goes down.
And looking at this very dicey affair that you've just painted for us on the canvas, East Africa has, of course, seen a number of shocks that have continued to permeate through the economies, including the issues you've talked about, from the drought to the high inflation to the fuel prices and the just concluded elections. But from where you sit, are you seeing penetration improving, or has it remained flat through the years?
Yes, again, to give context to the question, Abby, currently in Kenya, our penetration remains below actually the Africa average of 3.1%. We are on 2.2%. We are kind of fourth or fifth in the continent, with South Africa obviously being the first with about 12.2% as per 2021 figures. Now, with regards to penetration, we are not seeing a significant jump in the penetration rate, because GDP growth has continued to much outpace the growth of insurance premium in the country. However, again, even as we look at mitigating for the current effects of the downturn of the economy due to drought and inflation and all that, I must say the innovation agenda is taking center place, and especially even coming up with insurances for emerging risks. One, the most underserved sector or segment of our economy is in the microinsurance space, where very small businesses, and about 70% of business in Kenya, East Africa, and I believe in all of Africa, is in the SME or MSME, which is the micro, small, and medium enterprises. These are really underserved, and to make any significant increase or improvement in our penetration rate, we must serve these particular market segments and come up with solutions that are able to be affordable and that are relevant to that particular market segment. So the expected hope or the strategic initiatives that we are taking to be able to improve insurance penetration is actually now being able to distribute more and coming up with solutions more for the MSME sector, and for that matter, primarily in the agriculture sector. Your average subsistence farmer in Africa does not buy insurance, and this forms the larger part of the population of our country and the continent at large. So we must innovate. We must be able to penetrate these particular market segments, and that will come through various models, beginning with education and awareness. There's a general lack of insurance literacy in Africa. So like in Kenya, our insurance regulator, the IRA, Insurance Regulatory Authority, has actually invested quite a lot in improving education and awareness of insurance in the continent. So that's where we begin. But more importantly, the way we are structured as an insurance industry, we are not really structured to provide good solutions to the micro and SME sector. So we must innovate in that sector to be able to improve penetration.
Interesting that you bring up the conversation around penetration, and we've seen a number of multinational companies eyeing the East African market, Kenya to be precise. And what is triggering this? Is there something they are seeing in that market, considering the numbers you've just shared with us around the low penetration compared to what you're seeing in Southern Africa?
Yes, Abby, again, you're extremely right. There's been quite a great interest of companies coming to set up in Kenya or East Africa at large. And the obvious ones that come to mind are in telecommunication. We have Iristel from Canada, Starlink of the USA is thinking of coming over, and quite a number of tech and other manufacturing companies are eyeing this region. And one of the key attractions for these organizations is that if you look at Kenya and East Africa as a large, our economic bloc, which is East Africa community, keeps growing. Now we have a total of 5 countries, or is it 6 countries? Because we have Kenya, Uganda, Tanzania, Rwanda, Burundi, South Sudan, and recently DRC. So we are talking about a market of about 130 million, 13 million people and growing, and never mind linkages to other economic blocks like COMESA and SADC. So that's a great attraction for any business trying to set up here in Africa. Again, because Kenya and East Africa are centrally located in relation to all of Africa and also in relation to the rest of the world. We become a natural gateway into Africa for many of these companies. If you look at our population, about 80% of our population is below 30 years. There's a general, sort of like a push towards free education in these countries. So the level of literacy is exponentially increasing every year. So you have a very robust and a very robust young population that is well educated, that is tech savvy, and all these demographics play to the attractiveness of the region. I must also mention that Kenya keeps on being increasingly is being referred to as the Silicon Savannah. It's because the country has invested greatly in the last number of years in terms of IT and technology infrastructure. Access to internet is comparable with the best in the world, access and speeds and that kind of thing. So if you look at the opportunities that this region represents, it becomes a natural sort of like gateway or step for many companies looking to increase their presence or start their presence in Africa.
Upbeat sentiments there from you. And looking at the East African market, from your vantage point as a chief executive, what trends are you likely to see dominating the insurance business, especially for your organization, Minet?
Again, an excellent question. There are quite a number of macro factors that are playing into what is going to possibly impact our business as Minet or even the insurance industry at large this year. One is, as I said earlier, innovation. Innovation is a very big part of what we expect to roll out in everything that we do. Innovation in how we run the business, use of more and more technology in running the business, just even to manage costs, but also to increase efficiencies. Innovation when it comes to distribution. We have about 139% penetration of mobile phones in this country. So distributing more and more digitally. Innovation with regards to the products and the services that we offer the market. As I mentioned earlier, especially to serve the micro, small and medium enterprises that form probably about 70% of the businesses that are running in the country. Other areas of concentration are, again, talk of universal healthcare. That's a major conversations right now that is taking place, especially with the new government. So we expect the rollout of UHC to exponentially increase opportunities for the insurance sector. And we as Minet, we've invested pretty significantly with regards to our health business, being able to come up with products and solutions for healthcare as in partnership with government as it rolls out universal healthcare. Life insurance in Kenya has been growing at a much faster rate than general insurance. And at this rate, the life insurance may even actually catch up with the general insurance business in this country. Again, that shows you that there's more interest in life products, especially given the demographics of our young population that we talked about. So we expect to concentrate in those areas more and more. Probably other areas are now emerging risks or risks that have traditionally not been insured. You talk about cyber risks. Right now, the law legislation is changing very rapidly with regards to data protection, with regards to businesses requiring or feeling threatened more and more on cyber risks. So we expect to concentrate more and more with regards to how we provide cyber risk solutions to our clients and to even our business itself. And lastly, probably I may want to talk about the issue of climate change and ESG. We as Minet, we are trying to lead the conversation in the country with regards to insurance solutions and insurance participation in playing our part in helping in the climate change conversation, reducing emissions, and also encouraging business and providing solutions for making our environment cleaner and safer. So a lot of conversations now, and we're also leading in this discussion with regards to ESG requirements, where environmental, social, and governance policies have to be mainstreamed in all insurance conversations. So we as Minet, what we've taken is the position that we support ESG and climate change initiatives 100%. And what we are doing is helping our clients, especially who have actually been in the higher risk segments of society, segments of our business, to be able to transition into cleaner ways of doing things. So crafting insurance solutions to hold their hands and to support them through that process. So in a nutshell, Abby, maybe that's what I'd say are the key macro issues that we are looking at.